years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning and happy hump day, Wednesday, August 21st. I was just going over on YouTube Live. If you don't know, what I do at 8:30 is I jump on YouTube Live. And so I record this live. It's now 9:15. So typically I'm just interacting with people that chat, things of that sort. If you have the time and want to join, come on over. You can chat with me. And I go till about 10 o'clock. So it takes me a little while. And I was going over with a listener who had emailed me yesterday about stuff. But my schedule, the money that I make, I'm doing a video on that. It will get released. I'll put it out there. I'm doing really well on the podcast now. It's been 3 years. I haven't made money off of this before, but this year I'm doing really well. I appreciate the support. I appreciate you guys listening. I appreciate everybody reaching out and the interactivity that we've got with the community. Remember, I want to teach you how to fish. I don't want you to follow me. So that's the goal of the podcast, is to teach you how to look at these things. I heard somebody talk yesterday. Now the cues, we had an inside candle in the afternoon yesterday. Usually doesn't, you want to look at inside candles just as something that potentially could change the direction of the market. But I don't know that it has as much weight on a 4-hour or a shorter time frame than the daily. A daily inside candle is typically you need to look whether you have a confirmation, what direction you're going in. It could signal a turnaround. It could mean that the trend is going to go sideways for a little bit. It could just be, on the 4-hour, we could just have an inside candle and it means nothing. The MACD here on the cues, the MACD, we've gone up over the oscillator, back up 6 points above it. The last time this happened, we had the pullback. I am getting FOMO. Full disclosure, I am getting FOMO. And we'll go over target earnings. We'll go over volatility, how the VIX is going to be key, how the jobs market's going to be key. Abercrombie & Finch, 3M, Meta got pulled out of Alpha Picks. We'll talk about why. PayPal, Race, how this one gets cut. That one's just been a monster stock. Netflix hit 700. We'll talk about why. Stocks with improving technicals. We'll go over earnings. We'll talk about the top August and September stocks by Oppenheimer. Zoom has earnings today, what you can expect from NVDA earnings next week, and then some education stuff and some social requests. But yesterday specifically, I heard someone talking about great buybacks and how great buybacks were, and how Buffett had sold. It got me thinking, Buffett sold his Apple. And he sold a tremendous amount of Apple and Bank of America, both stocks that are in the core portfolio. And Apple had this second half where it was down. This wasn't at the time when Buffett was selling. Most of the time when Buffett was probably selling, it was during this time when it was going up. And so, again, earlier this year, he sold a bunch, and then he sold a bunch, and it's gone up since then. Who do you think is buying Apple stock back? It's Apple. Okay? Who do you think is buying Bank of America back when he sells it while it's going up? Bank of America. Again, he's selling these things because he thinks they've reached a peak. He doesn't know when to time the market, and he will tell you he doesn't always top it out. He sells when he feels like he's got a good profit. It may have taken over too much portion of his portfolio. He'll go over all of that in his annual letter, in some of his speeches. He'll go over that. But the 13F filing is nothing to be afraid of. Again, when it's that big of a move, and this guy who's been so successful, but I thought about it on the other end. Who's buying it? Well, the companies are buying it back. And Apple in particular, they wind up sunsetting the shares. They absorb them. They don't give them out to executives. They absorb them. They kill them off. Then again, returning shareholder value. That's how this stock has gone up so much. So, again, I just want to bring that up. It kind of popped into my head yesterday. Who's buying it? Let's look at the other one. Not who's selling it, but who's buying it. The company's buying it. Record buybacks. Now, Target. We'll talk about this because, this one hurts my soul. It hurts my soul. Target rallies after topping earnings expectations. Walmart and Costco again also gained. So your boy here has not played this one. I sold consumer discretionary. I sold Target. I pointed out I sold it down here at 132. And I went over why I sold it. Now, it was for 2 years I held this one. And I put up with a lot of volatility, a lot of management promises, and a lot of, hey, we're going to get around to this. And so I sold it back here on, it looks like August 9th. August 9th I sold it. I just said, I don't like this drop. I don't like, that Walmart earnings were coming out. I had reasons to do it. I stuck to my guns. I sold it. Probably should have trimmed it instead of selling it, but I sold it. I said, it's 2 years. I'm up 20%. I'm taking that gain. Now, this was a mid 5-figure position. So since then, after they killed it on earnings, it's up 23%. So that's about $10,000 in my pocket. $10,000 that's sitting there in cash. So yes, I have FOMO. Yes, I did this wrong. We can talk about Costco. Costco, I sold at $8.48, and I played this one okay. It wasn't great. I sold at $8.48 when it told me to get out right here. I didn't get back in. I didn't like this entry. I made the right call. I should have loved this entry at $8.16. I should have loved it. But I didn't. And part of the reason I didn't is we've gone over this. The actual valuation of Costco. It scares me. I'd rather own Walmart. I'd rather own Target. Again, you can read through these Target earnings. They were really, really, really good. Not just really good. Really, really, really good. These were exceptional earnings. Now, Target, they performed perfectly. This may be the start of the actual turnaround. We'll look at that chart again to see if we want to own this. They said the consumer's very strong and looking for value. Okay? That's what they said. I can't tell you the last time I was in a Target store, but knowing that this is what they're doing with their inventories and managing it and people are buying it, it might be time to get back into this stock. Let's take a look at a weekly, because is it too late? Where's the 200-day? It's at 175. Right now, you're trading at 165. You're going to have some resistance at that level. Okay, 181 was where it was before. Look how it topped out at 181. So if you buy at 165 or 166 or at some point today at 160, because I do think that you're going to see it, I think that's going to actually help this stock. If you buy it and it goes up, it's going to be good. It's going to be great, but you might have a cap on this one. So that's my point on this one is I'll look to get back to it. I'm going to go into Target. I'm going to look at some prices. We're heading into the retail season. I think it's going to be good. So Target, they killed it. Walmart and Costco, they're up as well. And yeah, Target's up 16%. It hurts my soul. This was a great interview with a UBS strategist who said that volatility is the key. Volatility spike was a huge overreaction, and we all know that today. We all know that volatility strike was an overreaction. So I want to read you a couple of quotes that I'll put in the newsletter. But until we're sure that this slowdown does not cost jobs in the U.S., we should expect that uncertainty to produce this moderately elevated level of volatility in contrast to what we've seen. Now, if you want to track volatility, it's the VIX, VIX. And you can just pull it up in Seeking Alpha and you can see a chart. And you can see that huge spike. Pull up 1 month because the VIX has been settling down here at about 16. Right now it's at 1594. For the last month, it's been at 15, 16, somewhere in that neighborhood. The average on the VIX is about 20. So we're settled into a normal volatility period. But this UBS strategist says, hey, we're going to see some spikes like this. Both the next, and this is another quote, both the next non-farm payroll report, which is published monthly, as well as weekly initial jobless claims will be important indicators in the coming weeks. All jobs data points will be the key data points for the next few months, while we would determine whether that is what is fairly clear now a slowdown. In a mid-cycle slowdown that rate cuts will eventually support, or whether the mid-cycle slowdown is actually something a bit worse and cascades with job losses into a deeper slowdown or recession. Looking ahead, Fowler says, UBS expects markets to settle at a slightly higher volatility level than we've gotten at the moment. Okay? That means this is going to go up. What happens when the VIX goes up? The market goes down. So that's what you have to know, is that even the experts are saying, hey, this volatility spike that we saw, it's not great. It wasn't good. We're probably going to see some of that, nothing to that extreme though. He said markets will then likely be trading within a range. It might be a range that has a slightly upward tilt, a slightly downward tilt, maybe it's sideways, but it's not the strong markets we've had. And that's what he says. And so when you're looking at your indexes, QQQs, VOO, when you're looking at something like that, you want to follow the trend. And I'd argue right now, we're in a bull market. We're in a bull market. I think you go up. But again, we don't have all of the data. So you're going to need to make sure that that jobs market stays strong. That's the point of this entire article. I want you to read the article, and I want you to read it in the newsletter. The newsletter is absolutely 100% free. It is 100% free during the week. And then on the weekend, I post paid ones. This weekend, I'm going to do strategies, technical strategies. So if you're interested, you can sign up. I give a free 7-day trial. Now, what are we doing for the next couple of weeks? SQQQ down 31%. I got an email from somebody who got stuck, and I think I went over this. And they tried to time the market in SQQQ. You can't. Apple's up 15%, AMD up 27%, NVIDIA up 43%. This is 2 weeks ago. This is just 2 weeks ago. They don't know how right I was 2 weeks ago. The bear is SQQQQ. Everybody else is partying. You know, NVIDIA up 43%, Tesla's up 22%, AMD at 27%, Apple up 15%. I sold AMD. I should be in it. I am exposed to it in QQQ. I am exposed to it in several other ETFs. So I'm not losing sleep over this, but I am starting to get FOMO. I'm waiting to be patient, but it is starting to get a little FOMO here. I want to point out something. Don't sleep on Abercrombie and Fitch. This is an alpha pick. We're going to go over a lot of alpha picks today. So let's go over the ad portion of the podcast now. Y'all see the charts that I do. It's on Trendspider. You know, if you want Trendspider and you want the 4-hour algorithm, it's here on Linktree, LINKTR. Hold on one second. Daisy, stop. I'm not getting her out of bed for you. So if you want Linktree, if you want Trendspider, it's on Linktree, linktr.ee/daily stock pick. It's the top link. And you go, it gets you over to here. Let's just refresh this so that I'm sure that the pricing is current, because that's what you click on. Yeah, $53 a month. $53 a month. You get my 4-hour algorithm. Okay, everything that I go over here on the charts, you get. You get my watch list. You get the custom scanners. You get everything. Everything that I've built over the years to use Trendspider, you get. And so this is the first one. I don't want you to sleep on this one. And the reason I don't want you to sleep on this one is we may be getting a little stretched, but we've broken the 200-day, and I think that 149s provides you absolute support. Okay, we've got earnings coming up on the 27th. I think they do really well on earnings. They've done it over the past few times. Look at this spike on earnings. Okay, then you had a pullback. You look at that spike on earnings. Then you had a pullback. Okay, they are really, really good, and it sells into earnings, and then it has a slight pullback. And so this one, you're just seeing a rocket ship up there. I mean, that's just a rocket ship of a stock. This is an alpha pick. So if you want alpha picks, what is alpha picks? It's 2 stock picks a month. It's the third link here. If you want to beat the S&P, alpha picks is the way to do it. It's a proven portfolio. It's 2 stocks, one on the 15th, one on the 1st of each month. You get alerts when to sell. In fact, they just alerted you yesterday. We'll go over why they alerted to sell Meta. but they alert you in the middle of the month. They'll tell you, hey, this stock for this reason is a sell, and sell it in the portfolio. And they track that. And so that's part of the return. It's about 20-something stocks, somewhere in that neighborhood. You get access to everything on day one. The performance has significantly beaten the S&P. If you're not used to doing fundamental analysis, this is your introduction to fundamental analysis. It is 100% great. Now, say you want to pick your own stocks and you know about fundamental analysis, then you use Linktree, and it's the second one, Seeking Alpha Premium. Okay, you get $25 off. There's a free 7-day trial. Try this one out first, because you get $25 off and a free 7-day trial. And this, you'll see me go over the quant, you'll see me go over that kind of stuff, but that's what that is. So let's start with Abercrombie & Fitch. The algorithm makes you 621% over 24 months. You make 756%. Yes, 756% if you buy and hold. Why would you want to trade? Because you make more money by buying and holding? Because stocks don't go up forever. Okay, when you get to this point, you want to make sure, A, the valuation is justified, B, that people aren't rug pulling you and just selling. And I don't think Abercrombie & Fitch is a rug pull. Even that 138, you're doing really well right now on that 138 buy. Okay, your average win is 24%. If you got in at that 138, you are currently up 21%. That's why I want to say, I don't want you to sleep. I don't want you to roll into this one. I wanted to point out the earnings. But Citigroup just upgraded them with a price target of 192. It's trading at 167. That's a big game up. Okay, we'll post this chart in the newsletter. But Citi adds Abercrombie to the positive catalyst watch list. Here, I need to bookmark this so that I include this article. I didn't put this article in my notes, so excuse me while I just add it to the notes. But again, they put it in with a $192 price target. And they went over this yesterday. Now, the quant has a strong buy. Why does it have a strong buy? Well, look at the growth, look at the profitability, look at the momentum, look at the revisions. It's ranked number 1 in apparel. It's ranked number 1 out of 37 in apparel. Now, PE's incredibly big, incredibly big. But their growth is incredible. And so the growth takes care of that PE. You are going to pay more for a company with this kind of growth. 20% revenue year over year growth. Leverage free cash flow, 814% year over year. Their revisions, everybody's taking them up. 8 up, 0 down. 6 up on revenue, 0 down. Okay? Don't sleep on this name. I like it. I don't own it. I'm not big on, owning these stocks, but I wanted to point that one out because I think that's a good one. Now, let's go over, another one that we're just going to go over, we're going to go over 3M. I want to point out that 3M, on a weekly basis, it started to move positive. So what I wanted you to do, I want you to look at the daily, the 4-hour chart, okay? The 4-hour got you in here at 104 right before earnings. You had this gap up. Now, gaps do get filled on the most part. They do get filled. But this company's on a rebound. And so that 131 is going to be resistance level that's 128. I'd rather see you buy at 132 after it holds that than to buy at 128 and hit out at that 131. But if you've got a full-time job and 3M fits your profile of investment, I think it's a good one. Now, the algorithm makes you 16%. If you bought and held this one for 2 years, you're down 15%. And that's what I want to point out. Don't sleep on this one. Okay, your 200 days still moving negative. That means that this one could go negative. The 200 days at 136, with the 131 being a resistance level. Again, look at that weekly. Okay, it topped out here. When it pulled back up, it topped out at about 131. That's why that resistance was there. The previous resistance was 109. It shot through that on this earnings. Okay, went right through that on this earnings. They've got a new management team. It's a little bit extended on the weekly. The RSI is at 73. But what I want to point out is the 50-day. Okay, the medium term is bulling up. You're trading on the top end of the Bollinger Bands. I like this one. Okay, from a value standpoint, let's just go and look at 3M. Because, again, they have a new management team who's starting to turn things around. That's what you want to make sure of. Now, the growth, we all know that that's bad because, again, it's a turnaround story. The PE, it's under what the sector's trading at. You look at their PEG, their growth is it's a mess. It's a mess. Their levered free cash flow, though, up 139%. It's pretty good. Return on equity growth, up 26%. So this is one that I don't think you want to sleep on, but I wanted to point it out. I wanted to show you how to do that. Now, Meta, like I said, was removed from AlphaPix, the AlphaPix portfolio. This one has been a monster. They got it in like 200s. I mean, they made their money on this. It's just traded sideways. And you can see it trading sideways. And the reason they removed it, it's because on the quant, it's been a hold rating for too long. And so they manage their portfolio. They manage their portfolio by the quant. And that's what AlphaPix is. It's the quant. And so they said the quant has it as a hold. And so we're going to, take it out of the portfolio. Is it a mistake? They're selling close to 52-week highs. The 52-week high is 542. Wall Street says that this one is 568 price target with a 7% upside. So why remove it? They base their portfolio on the quant, on these 5 sectors. And so, again, you can't argue. The performance of their portfolio is tremendous. And that's where AlphaPix goes. So do I agree with them pulling out Meta? No. Do I think that they're smart about it? It's in question. It's kind of like me pulling out Target. Probably not the best move, but it's an interesting one. PayPal. Remember where I sold this one and I said it at 65, it's never going to get up? We're seeing a breakout. We're seeing a pretty strong breakout on PayPal. Now, the algorithm got you in at 63 here. You still lose on the algorithm over 2 years. You still lose buying and holding for 2 years. You're seeing the 50-day kind of level out. Remember, we talked about 3M having new management. This one has new management as well. So this one could be turning around. Again, I read the articles about PayPal being one of the most undervalued stocks out there from a fundamental standpoint. I won't go into that. You can read plenty of them. But I want you to keep an eye on this one. It's not one that I'm looking to get back into anytime soon. The 200-day on this one is still up at 130. You got plenty of freaking time to buy this one for it to get back on the weekly to the 130. Now, Race. Race was cut by a sell by a group named Alpha Value after hitting all-time highs. The valuation on Race is crazy. This is Ferrari. Now, just know, they can name whatever price they want. This isn't price sensitive. Their customers are going to buy their cars. This has just been a stock that has just been on a tear. So the valuation makes no sense whatsoever. Now, when you look at Wall Street, there's 14 analysts that cover this. Their price target is 451. I got some questions about this one. I wouldn't buy it. Doesn't fit my profile at all. You want to know one that does fit my profile? It's Netflix. It's in the core portfolio now. It's pulling back a little bit. I told you it was going to hit 700. Yesterday in the morning, it hit 711. The MACD super high. The RSI completely oversold. Do I want you to buy this one now? No. Did I want you to buy it at 620? Absolutely. Did I want you to buy it at 650? Absolutely. Absolutely. I am holding this one. I think I should have probably trimmed yesterday. I'll probably start to trim today. It just makes sense. It couldn't hold 700. And is it holding 700 today? No, it's at 692. But they got huge upfronts, ad sales by like 50% or something. I don't have an article on this. I just read it. I didn't mark it. But it's based on their Happy Gilmore 2 and other programming. Don't sleep on this. Once it holds 700, you're going to see this one continue to go up. Again, who's not watching football on Christmas? What, are you spending time with your family? That's what you want to do? Come on. You're going to be watching football. The valuation is nuts on this. The valuation is crazy. Even the forward peg is a little bit nuts. But this is a stock that has continued to grow. They're cracking down on passwords. They're cracking down on my password. Every now and then my parents call me up. Can we get you to reset our Netflix? Yep. Sure, no problem. Don't sleep on this one. Again, the algorithm makes you 105%. Buying and holding makes you 180%. Did you want to buy in the algorithm? Absolutely. Your average win is 14%. And this isn't a crazy volatile stock. It's not crazy volatile. Yes, you had this 2022 period where it went down to under $200, and you're at $700. What, 2 years later? 2.5 years later, you're at $700, 3 times your money on a stock where who stopped paying for Netflix? Not me. Not me. Now, we can talk about improved technicals. Piper Sandler. They break it down by a spider sector. ILE, basic materials, XLF, XLV, XLP, consumer cyclicals, technology. You can look at these. All of these put out a list of companies that show 3 weeks of improving technigrade ranking within the universe of their coverage. Interesting stuff. Interesting stuff. Top August and September ideas from Oppenheimer. 32 picks. Freshpet, CarMax, Sweet Greens, NASDAQ, Crescent Capital, Goldman Sachs, Beazer Homes, Viking Therapeutics. We've gone over Viking Therapeutics. We see its current market cap is undervalued compared to its peers. We've gone over that one. That's one of those that has a GLP-1 drug. So there's tons of stocks in here for you to review. Tons of them. Okay? That's their top ones. Now, let's talk about earnings, because we talked about target earnings. TJ Maxx, I think, blew it out of the water as well. You can go and look at that one. One that I own is Snowflake. Will current data breach weigh on results? This has been a stock that has been, it's not been fun to own. Absolutely not fun to own. I have said it before. I like this range of trading with Snowflake. It broke through it, so it's not, hasn't been exact. I thought that there's 127 was going to hold the bottom. It didn't, but it didn't back here either. It didn't back in June of 2022. It didn't. The absolute bottom at about 109. Let's see. This one bottomed out at 107.93. This one bottomed out at 110. This one bottomed out at 112. It's about 107. It's on the bottom of the Bollinger Band. Now you do have a confirmation. You're starting to get it. You finally have your 200-day. Your 200 days right at that 206. Boy, where did I put the top of this? At 200. So I at some point in time, I think you get back there. Now, what you have to realize with this stock, it is 100% hype. The PE on this is crazy at 137. But it's their growth, okay? It's their growth, even with the PEG ratio, which factors in a PE and growth. That should be under 1. This is at 8.89. Okay, so the valuation is crazy. Then you add in those cybersecurity issues. That's why you're seeing this slide. And I'm not 100% certain that this one, remember, it was in the core portfolio and I took it out. What did I replace it with? Palantir. And the reason I replaced it with Palantir is I think Palantir's software is significantly superior to Snowflake's. And so, yes, I own a little. I think it's somewhere near about $2,000, $3,000, maybe $5,000 of this. For me, that is not a lot. That's like going out and buying a Happy Meal. That money is sitting there in hopes that it will pop up. I don't need that money today. I got plenty of cash on the sidelines if I want to buy a stock. I don't need that money today to pay my rent. I don't need that money in 5 or 10 years. Am I going to lose it? I could. It's still not going to affect my overall day-to-day, whatever, my thought process. It's not. In the core portfolio, these are names. This doesn't deserve to be in the core portfolio. One that does deserve to be in the core portfolio that has bounced, but the valuation is nuts, is Roblox. It's back over 40. What did I tell you? When it gets under 40, you buy it and you sell it over 40. That's the simple. That's just simple. Now, you can get up to 47 on this one. You're at 41. You can. They've already reported earnings. There's nothing going on with this one. One that's interesting, too, is Earnings Hub. If you don't know Earnings Hub, it's my favorite website for earnings. You can go and look at stuff. They posted this yesterday, and I thought this was interesting. Look at this revenue from Zoom. It's continuing to go up. There's been some recent news releases that may have raised some eyebrows, so let's see if they can exceed it. Zoom is an interesting one because it's not, yes, it's overvalued. Yes, they should, they probably should have sold to somebody. Nobody was buying them. It's a verb. It's not actually a company. It's a verb. Now, at 56, it makes sense to buy this one because you're at 59. It's a nice gain. You're bumping right up against that 200-day. I would argue, look at this when it gets to the 200-day, okay? This time, the earnings, it was at under the 200-day. It popped from 63 all the way up to, let's see, it got up to 71. That's a pretty good move. That's 10%. That's 10%. Is this one going to be similar? And that's what the earnings hub says. Now let's go over here and let's take a look at Zoom's valuation here in Seeking Alpha. The P is 10. I mean, you couldn't get any cheaper. The PEG ratio 1.36 again versus Snowflake. This looks like just a value. It's a value trap. Look at their growth. Their free cash flow for operating free cash flow. 49% up. It's not bad. Operating cash flow growth, 11%. It's just that, revenue on earnings year over year, 12,000%. But that's just because they were doing, they took that write down or something happened. EBITDA growth, 255%. Revenue year over year, 3%. Now their profitability, fantastic. 76% profit margin. It's great. But, their momentum sucks. Momentum is a hard thing to break in the market. That's what's hard. So even though this company's been doing well, that momentum's going to be hard. The company just isn't getting, you can look at their summary. The quant has them as a hold. I don't think it's had them. It has had them as a buy, a strong buy here, where it went in as a strong buy at 64, got up to 74. And then went down. It was in here at 73. It's a strong buy. Went down to 61 and then went to buy. But it's been a hold all the way since 63. It's trading at 59. Now, when you look at Wall Street, they say it's a hold as well. There's 34 analysts that cover this. But their price target is 75. 75. It has slid down since the price has come down. So to be honest, it has slid down. When you look at the revisions, okay, 29 have revised up in the last 90 days. 2 have revised down. 28 have revised revenue up. 3. So this one could surprise to the upside. I use Zoom for the paid members on my newsletter. I pay it. I actually like it. I need to start doing a Zoom again. Okay, but the big earnings that we're going to talk about today are here, NVIDIA. Earnings preview, okay? Party still roaring, but on alert for signs of fatigue. That's what they say. This is what the research said. It's down 2%, I think 2%. Let me see. What's NVIDIA? We'll go and take a look at the chart. And then we'll take a look at valuation of NVIDIA because I think it's one of the greatest values that you could buy, to be honest with you. We all know Meta. We all know Amazon. We all know Google. They're all spending on NVIDIA. Where's that capital going? Their capital, it's going to NVIDIA. It's not going to AMD. We didn't see it in AMD. We saw the promise of AMD. It's definitely not going to Intel. It's going to NVIDIA. Now, the Blackwell stuff, if you don't know that Blackwell's delayed, is that going to be like a shocking? That's priced in the market. That's priced in. I don't know who doesn't know that. This is coming up August 28th. Now, did you buy at 105? I've been adding this way up. I think I added at 110, 116, 118. I haven't added at 128, 127. I do hold some at 130 and 140, I believe. I'm positive on every lot that I've got, I think, except for the ones at 130 and 140. But they'll get there. When you take a look at NVIDIA here, let's take a look at this because here, Oppenheimer Asset, bullish on NVIDIA, highlights technicals. Currently, shares are $130, 7% away from the chip maker's all-time high of 140. Let's take a look at the quant here. Wall Street says it's a strong buy. You can take a look at the valuation. The valuation of this, the PE is crazy. It's at 70. But when you look at their growth, the PEG ratio, the forward is 1.27. Again, that's the forward stuff. We know they're going to blow it out of the water here. We know they're going to do it. Their growth is explosive. For a company this size to grow revenue 208% year over year, we know they're going to do it again. It's just going to be about the guidance. And if Blackwell's going to be significantly delayed, then the guidance is going to come down and you're going to see the stock pull back. Any pullback is an opportunity on this stock. I reiterate, any pullback is an opportunity on this stock. It's not like my understanding of this, and I am not an expert, but my understanding on this, when you put an an NVIDIA chip into your servers, you can't just take that out and swap in an AMD chip. There's software that's involved. There's rack space that's involved. It's not just that simple. It's not. Now, if you want to go from an NVIDIA, H100 to a Blackwell, it is that simple. It is that simple. You save, it gets you better compute times. It saves on your efficiency, your energy bill. So it is that simple. It is that simple. You swap it in because the software is the same kind of stuff and they make it easy. So you stick with the NVIDIA ecosystem. Where have we heard ecosystem? In Apple. That's where it is. I like it. Now, this particular article right here, it also said, goes about the stuff. Let's see. Here's an article. Where is it? I thought this had... Yeah, maybe I closed it. One of the articles has great. Oppenheimer asset management is bullish. I thought it had exposure, which ETFs had exposure. There we go. Not included are single stock focused funds. So USD, SHOC, and other ones, SMH, you can find they're heavy into NVIDIA if you want just again, an ETF. Now, Palo Alto, let's go into, education. I saw this one. I'll leave this one up, but education. FOMO, Steve Burns posted this. FOMO, not trusting your trading system, trading out of boredom, not waiting for your system. Don't trade your impulses, trade a quantified strategy. My strategy is the 4-hour, okay? I got a question about this. How, do I use just the 4-hour? What's my system? Personally, I trust my instincts. And part of the reason I don't trade based on the algorithm alone. Like you can launch a bot here in Trendspider if you trust the algorithm. Part of the reason is I've got 40 some years of trading. And so I understand my instincts. I used to trade where you'd wake up in the morning, look at the paper, and that was where you saw the stock price. You didn't have charts. You didn't have any of this stuff. It was understanding that, hey, I know where the market's going. I know the valuation of this company, and I researched it. And I can look at a stock chart that somebody else drew, and I can look at it and say, okay, I think the trend is trending higher, and you can invest in that. So my instincts are there. Yes, I'm a boomer. My IWM, my CrowdStrike purchases were examples of not being patient. I've gone over this. Target, it's not an example of not being patient. I gave it all the chances in the world. It's just bad timing. That's all it is. So remember, size, position, timing, all of that matters. I started the show out by saying, yes, I've got FOMO. But no, I don't have FOMO because I'm being patient. I'm still heavily invested in this market. It's not like I have zero in the market. I didn't sell out. I trimmed, and I trimmed at a bad time. I will have an opportunity to get back in. It might be at higher prices, but I want to make sure that the market is changing. And I just don't have that 100% positive score right now. Now, I got a question, but I'm going to bring this one up.
I've come across many investments in my time, especially when I used to be a
second one. Humphrey Yang is a certified financial analyst. He's much better than I am. And I got a question from NVIDIA, Raphael. First, just wanted to say I really enjoy your podcast. Thank you, Raphael. I know you've mentioned buying into NVDL with your recent podcast discussing NVIDIA being a long-term move for you. Would you recommend NVDL or NVDA and holding, since I know leveraged ETFs are usually a better trade? So, Raphael, here's the thing, and I told this. Let's backtest. Here's what it is. NVDL, over 2 years, if you bought and held NVDL, you're up 1,442%. Okay. If you trade with the 4-hour, you're up 1,041%. That's NVDL. And I would tell you, NVDL historically, this might be a better thing for QQQ and T. Because what I want to show you is it's not a very good idea to do that. And Humphrey points this out in that video, and I will include the video in the newsletter. But what I want to point out is over time, there are certain ETFs. It's not an investment. They just perform better. And so it's not an investment. And you can see TQQQ here is the purple line. And so over 5 years, if you just did QQQ, you're not doing as well as TQQQ. But TQQQ during that downturn of 2022 pulled all the way back to equal QQQ. And remember, in TQQQ, you don't own the stock. You just own options. That's how they do it. And it's daily. It's not, they trade in and out of these things daily. So QQQ, you actually own the stocks as part of the ETF. I will include this video from Humphrey. It's his number 2 reason, number 2 investments that will keep you poor. And that's the reason. NVDL versus NVDA is the same exact thing. So I want to make sure that you know that. I don't think that, over certain periods of time, TQQQ will outperform QQQ as long as it's continuing to go up. But during a time when there's a downturn, because it's triple levered, and you can say, yes, I'll time it, but no, you can't. You can try, but no, you can't. And so you can see even back here in 2020 during COVID, QQQ underperformed. It was down 31% versus the Q's down 3%. It's not something I would ever lead you into. So I would always say NVDA. Am I buying NVDA or NVDL? No, I'm buying NVDA. Maybe a boomer response, and I may, again, cost you money, but it depends on your thesis, your outlook, your timing, everything of that sort. You're different than I am. I can't guide you in that sense. But for me, I would say NVDA all along. Jacob, you were talking about cybersecurity today. I've been eyeing Sentinel since my company I work for uses that and they swear by it. How does it compare? Well, ironically, Palo Alto Q4 earnings paying a premium for yesterday's security. Michael Wiggins, Oliveri, I think that's how you say it. He looked at Sentinel-1 versus PanW. This is the article you want, Jacob. It's on Seeking Alpha. I can't do it justice. I don't own Sentinel. I own Palo Alto. Simple as that. I mean, if you want to chart these ones, let's look at PanW. Let's just look at select symbols, and we'll do Sentinel. And we'll look at, long-term between the two. And I'm just going to look at the performance. 1 year, PanW's up 50%. Sentinel, 43%. PanW over 3 years, up 193%. Sentinel, down 53%. 5 years, PanW is up 434%, and Sentinel is down 43%. So I think, again, does it mean that Sentinel doesn't have a chance to come back? No. Just means that I'm a bigger fan of PanW. And I don't know what your company uses. I am not an IT expert. I just know some stocks. And it seems like I picked the right one. So I think that's a good enough one for you to look at. But that article will explain it well enough so that I don't necessarily need to go into that for you. I think that article will absolutely guide you. Nick from Spotify, can you look at Kava earnings? Are coming out in a couple of days, and I heard positive things about the stock and the company. I have a feeling it'll do well as it's been doing well for a while, but it was just at an all-time high, so I'm not sure. So Nick, I wrote back to Nick. I said, remember, asking me about Kava is like asking McDonald's about the Whopper. I don't do restaurants, but let's take a look at the stock. It just got downgraded by some firm I saw the other day that said high-end casual dining is overhyped. You got a MACD cross down happening on the RSI. The algorithm still has you in. I wouldn't buy in at these levels, but like you said, their earnings are coming out. Maybe they're going to announce crazy earnings and crazy growth. They could, Because look at the last two earnings. It was trading at what, 50? And it shot up all the way up to 68. And then it came back down to 60. And then the earnings here, it was trading 81. And you shot all the way up to 94, 98, and you're trading at 98 now. So Kava in the Seeking Alpha, let's look at it in the quant. It's a hold in the quant. And the reason it's valuation, you're paying for that growth. The PE is 177. Why don't you buy Snowflake? At least they're making money. We can look at the financials, from Kava. Let's look at the growth. The growth is where this one is, 29% year over year. Their EBITDA growth, 185%. Operating cash flow, 221%. Got an A. Profitability sucks. Their gross profit margin, just right on par. Their levered free cash flow, they're losing 6%. So, I'm not a fan of this one. I would tell you, Nick, if you eat at Kava, don't ask me about the stock. Go eat at Kava. If you like it, buy the stock. Because if you like that food, other people will like it too. But if you don't eat at Kava, do not invest in Kava and don't get wrapped up in just, something. Kramer talks about it all the time. His wife loves Wendy's. He owns fucking Wendy's stock. I think he owns ETFs, but he loves Wendy's. He said he would buy the stock because his wife loves Wendy's. Simple as that. Restaurants, it's not that hard. I will tell you, one that is an alpha pick is Eats. I don't think I can, I don't know if I'm supposed to say it, but Eat. It's an alpha pick. That was when it was an alpha pick back here in April. So I'm probably not even supposed to say that it's an alpha pick. I think I'm okay saying it. But that 45% run, and it's pulled back. If you got a weak consumer and you got a stock that's trading at that multiple of 250 PE or something, 277, it's going to pull back. At some point in time, that valuation hurts it. And so when they go look at articles, because I know it was just recently downgraded as well. Melissa from Facebook wants my thoughts on Sunrun. This is RUN. I thought this was like $1 stock at some point. Sunrun, the algorithm makes you 13%. You lose 47% if you bought and held this one. That's an ugly stock. That's an ugly stock chart. Would I want to get into this? The 50 days kind of flattening out a little bit. The RSI run a little bit. It's up at 64. We can take a look at run here. Let's look at the run. It's a quant hold. It's a sell from Seeking Alpha analysts. It's because of the growth. Is this a solar company? Let me see. Is this solar? I'd stay away from solar to be perfect. It develops, installs, sells, and owns. Yeah, stay away. I'm just not a fan of solar right now. I think there's too many issues going on with solar in particular, and I would stay away. Melissa, trade it. That would be my opinion on it. Opinion on Rich Tech Robotics. Rich Tech Robotics. Rich Tech. It's RR versus. This is Mr. Kraft asked me on. He asked me opinion on, is it a long-term hold similar to Surf? I've never said Surf was a long-term hold. I don't think that Surf is a long-term hold. I think Surf is an obvious trade. If you think this is a long-term hold, you buy into this. This stock chart, right, to me, doesn't say long-term hold because it hasn't even been a company for, more than a year. It's been less than a year. You don't know in a year if this is a long-term hold. RR, they're probably not making money. So there's no way I can tell you that. Trade that it's losing $2 million, okay? They have cash on hand of 14 cents per share. What's 20 million times 0.14?
Answer it.
So they're losing $3 million a year, and they have $2 million of cash on hand? How in the hell are you going to make money in the long term if you're losing more money than you have cash on hand? Oh, I'm sorry. What you have to do is you have to dilute shareholders. You're going to issue bonds or more shares. So no, trade it. Simple as that. Simple as that. Scans. In the core portfolio, we got Pepsi. I know Brandon bought this one on the dip. Kudos to you, Brandon, on the earnings dip. He said, hey, they're doing well. I'm going to buy it. Got another buy here at 170. That was a 7% gain in the algorithm. Okay. It's $174 is to buy in right now. You're trading at 176. The algorithm doesn't perform real well on this one. I've said this is a buy and hold if you drink Pepsi. Just if you drink Pepsi. And I do. I drink Pepsi. But, nobody's actually said, hey, we've got an issue with GLP-1. Nobody said that. Now, McKesson. This is McKesson. They have a gap here from earnings from 577 up to 614. Hasn't started filling, but the algorithm gets a cross up here. 549.29. You're trading at 552. Interesting opportunity. I don't know what happened with earnings, but that's a big drop. Trading below its 200-day. When you take a look at the weekly on this one, we're still extended, so it still probably has room to go down. Wait until you start to see it fill that gap. That would be my guidance on that one. Don't try and time it. We got energy, we got Boyle, we got TMF, which is Treasury. This is a Treasury leveraged ETF on the 20-year bond. This is 3 times levered. In the 4-hour algorithm, it's been doing really well. It's down, you're down 6% over 2 years. But if you bought and held this one, you're down 53%. Again, it's a daily bullish Treasury. So when the 20-year goes up, this one is 3 times levered. So the 20-year's been going up. So it's a bull. It's a bull. $50 was the initial buy. We just got another entry into the algorithm up here at 59. Now it's a little bit extended, but that $50, great play on this one. Because again, you're at 59. That's 20% right there. That is a great play. I mean, look at that. What, 16% right now? 16% in 23 days. Again, the algorithm, for some things, it works. Again, if you lose 6%, it's better than losing 53%. So it provides you a little bit of protection there. Looks like we got some red on the board, some green. Amazon is up. I said Amazon was a buy when it took this dip, that we were going to cover this gap. Yes, I bought more at 168. I mentioned that one here publicly. So if you want to follow me, that's one that I mentioned. But if you're interested, yeah, the newsletter is up there. You've got Trendspider. You've got everything. And I will tell you, again, I made a bunch of trades yesterday in my Webull. I love Webull. And I just get in and out. When I'm sitting there on the couch, I go on Webull, and then when I have free time, I usually don't have a lot of free time, but it's the 4th link right here. Get free stocks with Webull. I love the mobile app. I love trading like it's a sports gambling bet during the week. I just sit there and I gamble with it. I will tell you the 2 large positions in my Webull account currently. It's NVDA, which is, $3,000 of the $7,000, and it's IBIT, which is $2,000 of the $7,000 that I have in there. The rest, my cash position is $2,700. So I have $2,700 in cash. I don't know why I have $2,700 in cash. I have Apple, I have Google, I have Snapchat, I have Spotify, I have Ford. I've got a bunch in there, but again, that's, at the very least, that's what you should be doing. You should be going over there, gambling a little bit. Make it fun. But don't put a ton of money into Webull and then go and blow it up when you don't have to, you can't afford it. Again, I put $1,000 in there. It's now worth $7,000. Even if I had lost that $1,000, even if I lose the $7,000, it's not changing my life. Okay. I will talk to you guys tomorrow. Let's hope for snow after the bell. Zoom is one interesting one too. Okay. Talk to you.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.